Hey, what's going on YouTube? Millennial Trader here from the Millennial Trader YouTube channel. Today is December 10th, 2024. Is Bitcoin's run over? Right now we're trading under $100,000. Has the Bitcoin run met its match, or is there another potential push to the upside underway? We'll take a look at the Bitcoin greed and fear index. We'll gloss over the Bitcoin dominance chart to see what is currently playing out in the market. We'll review Bitcoin's price and some of the technical analysis indicators and tools that I use, and give you my thoughts in terms of where we're potentially heading to next. We'll take a look at the relative performance of Bitcoin versus Ethereum. Continue to update you in terms of what my thoughts are in terms of directionally, which one I want to be in versus the other. We'll also recap Ripple, and we'll check in on a trade that I started to put on related to AVAX. All right, so in the last episode, I kept mentioning that in relation to the greed and fear index, we generally don't stay in the extreme greed area for an extended period of time. It's just not typical. Generally, those are periods of euphoria, and then as the market kind of settles down, we kind of play within the lines, and then ultimately we come back down and trade within what I'm going to call the normal area, somewhere between the green and the neutral area. If I'm looking at this high level, somewhere in the 80,000 to excuse me, somewhere between the 80 and 70. That's generally where I think we'll probably be in for the next little while. We might get a secondary push up as we get closer to Donald Trump's inauguration in January, but we'll see how things play out. There's a couple of macro uh, economic things also playing out at the same time between Syria, we have Russia, Ukraine. Um, China sometimes makes a noise in terms of stimulus or other issues, but we'll see how things play out. But as I've mentioned previously, um, it's still a bull market. You generally want to continue to buy dips, in my opinion, at least for the majors, which are, I would say, the top 25 coins. But again, you're going to have to appreciate and understand that there is going to be periods of significant market volatility, especially given that Bitcoin and some of the other altcoins have run up, 100 to 1,000% this year. So, just understand that you're potentially buying at relative peaks. And, from the charts that I'm going to review, there are areas where I would potentially want to lean into if we get the chance. Um, so that's generally my thoughts. And look, over the last week, clearly, as I mentioned, we were at 83 on the extreme greed. We've pulled back to 73. So now, we've come off significantly. Whether we stay within this range, it's possible. And it wouldn't surprise me if we do, just because generally that's a tendency. We might come down a little bit more just for um, additional, just as we kind of take out some of the new longs and and wash out those new longs positions. But we'll see. Let's take a look at the Bitcoin dominance chart. So again, over the past couple of episodes, I've been saying that Bitcoin's dominance generally stays somewhere between 50 and 60%. 60%. So clearly from Bitcoin's most recent $100,000 run, we've come off of it significantly. We're now playing in the 55% area. What's notable is that all of the altcoins, I guess altcoins in general, their relative dominance has actually started to creep up significantly in a major way. So, clearly the the potential gains in Bitcoin, I would say, are now limited, just because you don't generally get $10,000 swings on a daily basis, and that same dollar volume has somewhere else to be reallocated, and that's generally into Ethereum or the altcoins, because um, you'll do a significantly more um, you'll have a significantly better opportunity using the same dollar volume to have significant impact on those lower float, those lower market capitalization coins, and that's generally how the seasonality of trading Bitcoin and the altcoins tends to play out. So right now we're seeing some explosive moves in the altcoin space, which is typical of, I guess, the next phase of the market from Bitcoin's dominance, now pushing into the lower cap and the meme coins. And generally, if you look at this in the past, like 2021 period, they were kind of playing mixed in between each other, and that was probably from the last time the market was in a period of euphoria. And then obviously the tendency since the beginning of time has been for Bitcoin's dominance to kind of gradually decrease as more coins get online, and the overall liquidity tends to increase for the other altcoins. So, I'm not saying Bitcoin is going to break down or have a significant price drop, but there's definitely more money to be made, at least from a tactical point of view, in the altcoin space, and clearly that's being shown right here, where everybody's the charts, that's where everybody's kind of playing into, and then you have the Marxist Bitcoin bulls that they'll continue to buy the dips, based on their particular circumstances. So overall, nothing overly glaring in the markets. It's still a bull market. Continue to I guess to be tactical in terms of where you're buying, and then of course if you're holding these particular trades for a short period of time, just be strict in terms of your rules, because it'll save you more often than not. All right, so I'm going to bring over my chart. We'll take a look at the first chart that I typically like to look at, which is Bitcoin. All right, so I made the case that where I potentially see Bitcoin topping out is at the $107,000 price level. We've moved in one direction, with momentum, significantly enough to pass through this $78,000 price level, which then suggests to me that we could ultimately reach this $107,000 projected area of resistance based on the propulsion indicator developed by Tom DeMark. Again, over time, I'll kind of explain in detail what they mean and how they're calculated. But as we get closer to the completion of the countdown phase of both counts, that to me just gives me further indication that that is a potential area where Bitcoin will top out in the short term. Uh, we have we have the sequential 9 completion, and the 13 also completed. So those are two objective levels that suggest to me that this is potentially an area where Bitcoin may top out at. If I'm going to initiate new longs, I definitely don't want to be putting them on right here, right now, because the sequential model suggests that it's a really bad time to be putting on new longs because there's a higher chance or higher probability of potential drawdown, within a matter of days or weeks from when you put on this position, just based on um, how the indicators have kind of lined themselves up. If I was going to put on a trade, or at least to initiate a new long, I would want to see how the candles close, um, and this is on a weekly time frame, how the candles close relative to this invisible area of support. And again, in a bullish environment, these areas are potentially where bulls may want to take a stand in terms of seeing whether they can continue to push the price up over time. So I'm not currently in a Bitcoin position. Clearly, year to date, I think the Bitcoin has moved 134%. So, had you used these models earlier on in October, you know, there were signs and the indicators suggested that these levels down here were the areas for you to potentially buy, um, or at least start to scale in for the potential upside, to where we are right now. And again, look at where we're currently trading. Over the past 4 weeks, we've just essentially been range bound. So there's a lot of digestion happening in the market, factors that I'm not aware, that I don't even know of, but they're playing out. They could be happening in the derivatives market. There could be other um, larger entities that are potentially um, impacting the buying and the selling. So for me, you know, the indicators are proven time after time of areas where you potentially want to scale out from. And there's no there's nothing wrong with you potentially buying back in later at a lower price. If anything, you're just saving yourself some short-term heartache because of how far the coin has moved up since the initial bull run, right around the U.S. presidential election. So for me right now, I'm not interested in putting on or adding new Bitcoin exposure. I would much rather wait to this $90,000 price level. And in fact, notice how, because I have the Ichimoku cloud also displayed, you'll see how close price has always traded within, relative to the conversion line, which is basically the first level of support, using this Far East Asian indicator. And considering how far we are currently in terms of price to this support line, again, there's a confluence of signals that suggest to me that this may be a potential turning point or a consolidation phase for Bitcoin to ultimately come back down and kind of retest these areas of support before finally pushing back up to this 107 area. I do generally think the 107 area is still possible, but should we break down from this 90,000 price point, then I might have to reconsider whether we need to start looking the opposite direction and potentially short Bitcoin, using Bitcoin options in the ETF, or potentially shorting the coin itself directly. So it remains to be seen, but right now I still believe Bitcoin has the potential to push up to this 107 area, but I'm not in it because I think there's value in other coins to be looking at, for relative price appreciation and higher gains. All right, so we're going to take a look at Bitcoin relative to Ethereum. And yep, as I continue to say, over the past couple of weeks, Ethereum's relative outperformance is being displayed right now. towards the middle of November, and middle, beginning from the middle of June up until the middle of November, Bitcoin was outperforming Ethereum in a significant way. Now we see that reversal potentially happening, where it's now Ethereum's turn to take over as market bull and give Bitcoin some time to breathe before potentially moving the market higher into the new year. And that's kind of where I'm playing for directionally. Excuse me. Again, we just recently completed a sequential 12 of 13. So long as the current close is higher than the close, it's higher than the low 2 bars prior, we will ultimately complete a 13. So right now, let's see, the close is 26,571. So we're potentially going to complete a 13 because we would also have been higher than this 8 count here. And so in order to complete a 13, both the condition of the close of the current candle needs to be higher than the low 2 bars prior, but it also needs to be higher than the the low of the 8 count back here. So we could potentially finish out the 13 count, in which case that would ultimately complete this bull run, in which case I may want to be looking to continue to buy Ethereum for its relative outperformance to Bitcoin going into the new year. And right now, again, any kind of price decreases in Bitcoin relative to Ethereum is actually Ethereum outperforming Bitcoin. So right now we're on a 1 count. It's the first count of the 9. So we potentially have 8 additional weeks where Ethereum may outperform Bitcoin. And interestingly enough, MACD also crossed bearish, which is another confluence of signals for me to say that, looking at buying Ethereum is potentially the right play. And as I mentioned previously, I'm building a significant position in Ethereum because that's where I believe the next phase of gains in the market are going to be had to push Ethereum to all-time highs. In a similar way that Bitcoin exploded to the upside for its most recent $100,000 all-time high. So I'm long Ethereum. I continue to be long. I continue to add at tactical areas of support and resistance. So long as if we close below, if this week or next week we close below this support area by propulsion, which is an exhaustion momentum area, then that would give me higher probabilities that Ethereum is going to outperform Bitcoin. All right, let's take a look at Ripple first, because I mentioned previously that I am long Ripple for the potential play to its all-time high, which was at $3.34. So, we backed off from the most recent high at around 290. We're about 60 cents, off from the most recent high. The chart right now still shows nothing to worry about. I would prefer, if we get back up to this $2.50 area, for me to want to continue to add to my position. But having said that, based on the current count, we're at a 6 of 9 count. So potentially 3 additional weeks where the close is higher than the close 4 bars prior. And so long as we, in about 3 weeks, we're higher than 290, that'll complete to $2.90. That'll complete to a 9 count, which is what I'm expecting. If we get to $3, great. But like I said, at the current point in time, I am long XRP for the potential continuation to its all-time highs. All right. Again, similarly, I mentioned previously that I started to I entered a position in AVAX because I like the relative strength of AVAX versus Bitcoin. Right now we're on a 4 of 9 count, so we still potentially have 5 additional weeks of relative outperformance. Um, I am anticipating that we get, um, ideally, we would retest this area up here, which is basically the high, so the buy TDST signal is basically is the candle with the highest high in this 9 count series. So long as if we get past this, then um, the model will stop counting to a 13 to the downside because we moved enough in one direction that the momentum has changed and we're now looking for a trend for a continuation of the countdown phase to 13. So that's what I'm potentially looking for. We paused back from this hidden area of resistance using the propulsion indicator, and again, look at how just look at how these candles are playing out. Believe me when I say that the market indicators work, because hundreds and hundreds of institutions, hedge funds, large pension funds are using these models to build out their potential um, equity, crypto, bond positions in the market. So there's significant merit in continuing to utilize these models. Yes, they're not going to work all the time, but if you understand the models correctly and if you use uh, a complement of different models that suggest to you the same thing, then you have a confluence of signals, and then based on that, you manage your own risk in terms of risk management and where you want to take your trades to optimally set yourself up to uh, potentially having higher win rates and things like that. Nobody is going to be ever is going to ever have 100% win rate, because it's not possible unless either you're taking your positions are so small that you're willing to let them play out for years and years, and then eventually you'll be right, be either on both the bullish and the bearish side. So in that case, you really don't want to be paying attention to them because they're really not trading in a meaningful way. Um, that's just my thoughts. I'm still bullish AVAX relative to Bitcoin. Um, I'm potentially looking for this, as I previously mentioned, I'm potentially looking for this to play out and hit the bottom of the Ichimoku cloud as a potential area of resistance. At which point, I will um, take off my position and enjoy the gain on that trade. If we blow past this area of resistance before the 9 count completes, then I'm potentially looking for the top of the cloud as to be the next area of resistance, which happens to be at the propulsion exhaustion level. So again, that's an unrelated area of resistance and an unrelated area where we may potentially top out for some sort of consolidation in the meantime. So I like the setup. I'm going to continue to hold it, and that's about it. Let me. I don't necessarily do this for the crypto channel, but let's just take a look at Bitcoin relative to the S&P 500 and see what kind of information we might be able to gather from there. So interestingly enough, we know that SPY is generally in and around the area of all-time highs. Bitcoin is also in and around the area of all-time highs, but what's interesting is that Bitcoin's relative outperformance, we see here from the DeMark indicators, that we generally just what's notable is we actually just completed a 9 and a 13 combo count, and we're potentially in the process of completing a 9 sequential count. So to me, that's also an indication that we may potentially be at a topping point in Bitcoin. So, it's that just gives me more credence to, potentially start turning on the headlights as to a potential or an alert in my mind that we need to just be mindful of where we're putting on new positions in Bitcoin, because there's the potential for Bitcoin to now underperform SPY. Again, I've also previously mentioned that Bitcoin is now underperforming Ethereum, and also starting to underperform a lot of these other altcoins and these other major alternative coins, the top 25. So, you know, I don't know if MicroStrategy and if BlackRock, if what they're doing in the market is potentially impacting sentiment. I'm not a fundamentalist, a fundamental trader. I actually believe that the fundamentals confirm the technical, the technicals, uh, and the technical trait. The technicals are forward thinking. They look at the emotions of the market. You're taking a step back in terms of understanding what's really happening in the market. The fundamentals will ultimately confirm or deny the price of a particular stock or security or cryptocurrency. So for me, and what's also interesting is the fact that again, we've just been consolidating in relative terms to SPY, and again, SPY is in and around the same consolidation area, but the lagging span is kind of just bouncing up and down, up and down. So, I it's hard. And what's also interesting is the fact that we potentially have a bull flag in Bitcoin relative to SPY. So if Bitcoin does continue to see price enhancements, I do believe it'll be up to that 107 area, at which point we'll probably top out for, let's say, for the foreseeable future, let's say the next 6 months. In which case, I think some of the other altcoins will start to have significant market share, or at least the volume in the altcoins will continue to outpace Bitcoin. And from an overall stock market performance, I think those people who were in Bitcoin will start to reallocate capital back to the S&P 500, just because relative strength and relative performance suggests that um, if Bitcoin's closes below this 185.53 factor, then again that just lends itself and additional confluence of signals that there are other areas in the market to potentially be in long. But we'll see. I'm not making any significant bets in terms of looking the opposite way of the cryptocurrency space. It's still a bull market. Continue to be bullish um, until confirmed otherwise. $90,000 is an area that I would potentially want to to put on a new exposure. We'll see if we get there. 107 is the area that I think we'll top out at. And just understand that any positions that you have in crypto, you need to understand that there's going to be significant volatility. You have to be able to keep your emotions in check, because overnight a coin can drop 15-20% just like that for no reason. And you have to expect that, knowing that this is an area where you potentially can generate significant alpha, but it comes with significant volatility and significant risk. So that's it for today. I just wanted to check in with everybody, give you my thoughts. 107,000 price target for Bitcoin in the near term. $90,000 price point for an area that I'd want to potentially buy the dip at. I'm not doing any potential buying at current levels. I want to continue to be long Ethereum, continue to be long AVAX, and we'll see where the next few days lead us with some other macroeconomic headwinds in play. All right, thanks a lot. If you like the channel, subscribe, give the video a like, leave a comment. Let me know if there's other coins you want me to potentially take a look at. I am also starting to look at a few other coins in terms of building a position in. So I'll update you on that when that happens. I'll probably do another video in a couple of days, maybe towards the end of the week, just once I have a few more days of price data. But that's it. Thanks a lot. Millennial Trader out.